Good evening, I'm Giuseppe Basile, I'm the essentially you can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening, today is Wednesday, July the 24th, and it's 10 past midnight in Toronto, and in this video I'm going to provide you a midweek review for the 12 markets I follow. It's going to be a 15 to 20 minutes video, and you can actually fast forward if you're interested only in some of the markets I'm going to touch upon. This video is part of my midweek review, which I post on my blog. If you want to get more information, if you want to get the most important weekly review, you can subscribe my newsletter for free. Just go to the website www.fibstalker.com, and I'll be very happy to provide you with 3 videos every weekend. So let's start from the euro dollar, which is on the screen is the daily chart. Those who follow me will remember that I've been using this 138.40.34 anchor to lows and identified the first area of resistance, 136.70, and this area has not changed in the last month and a half. And we saw participation at this in the area between 136.70 and 137.10 here. The price never pierced the 137.09, and as you can see, price continued lower into the first target at 134.25. I believe that this market will see some profit taking a little bit lower within 133.76. However, there is also the potential for this market, being in an extension short, to reach the 132, 133 level. So this is where we are in this market, and at the moment we are trading the inner measure move. As you can see here, when we trace from highs to lows, there was participation at this 136.80, 136.40, and that brought price into the first and second target. As you can see, at this second target there was a participation higher, and then there was a continuation lower. So at the moment we're just waiting for this market to continue lower into the first target at 134.25, and this could happen at the end of the week, by the end of the week. Moving to the SP 500, this market has continued higher. You will remember that I've indicated the low to high here from 1918 to recent highs at 1978, and the market reacted to this area the first time, and then it came into it again and reacted once again and brought price into 1993. Actually, is bringing price towards that target, and that's a first target for this measurement. So of course this market can continue higher, and we know that on the larger time frame the target for this market is 2500. So I don't believe this market will stop and reverse just on a dime. There are a lot of people who are calling for the top, calling for a reversal. There are no signs of this just yet, and this market is moving in extensions. Moving to the dollar index, you will remember that I've indicated this area 80.10 down to 79.85. Initially this level was pierced, and then the market went to retest this level again, this area of support, and the second time this area of support was respected. So at the moment this market is moving again back into an area of resistance, and the first target is 81.76 is within that area of resistance. So what I'm looking at the moment is a continuation higher, which would basically mean a continuation lower for the euro, and actually the euro is the main reason why I'm looking for this market to continue higher, and previous highs could be the target of this basket setup, and after that we could see a sensible retracement, but this market has a toughest target in the 81.70 area. Moving to gold, I mentioned that gold is in this large correction here, and last week we identified this 1292 area of support. It acted as a support. I also noticed at the beginning of the week that this market is also respecting shorts, and when we trace from recent highs to lows, which is a short on the 4-hour chart, we see that the first target is that 1280. It's right at that level of failure of this area of support here, and the second target is right at that trend line. Now I don't choose trend line, I'm just showing here how you can use program trading modeling to actually fit into traditional technical analysis, although I don't believe in traditional technical analysis. We cannot use this line as a line for a decision. We can only use information that derives from violation and interruption of trends that are generated by algorithmic trading. At least that's my edge, and that's the way I look at the market. Moving to the US dollar versus Japanese yen, we know that this market is in this area, large area of support, 101.50, and at the moment what we see is a market that is moving lower now back into this area of support, and as soon as it went into this previous area of low here, we saw a participation on the upside on the smaller time frame. Now this market has a basket setup which could actually bring price right at this 187, and at the point we would see we should see, or we could see, it's very probably we are going to see a brisk move higher, and the reason for that is there is no support on the short term, sorry, on the short side for this market. So at the moment there is still a possibility for this market to reverse and continue lower, and around this level I will want to see some kind of participation. Below 161 this market could retrace even more. However, the US dollar is in a move higher, so I do not expect the Japanese yen to be stronger than the US dollar at the moment, although that could happen, but you know, it's very difficult to make recommendation and consideration on the fundamentals or what should be the stronger or the weaker pair. Some traders do those kind of considerations. I think it's just flipping a coin. The most important thing is to look at how price is behaving, because we cannot anticipate one pair suddenly becoming weaker than another. So at the moment I'm waiting in this market, and if a confirmation of a resumed move higher will only come for me if price breaks above the current area of resistance, which is what we are seeing the market very close at the moment. Another resistance starts in 101.68, so only if we break above 101.82-83, then we can call for a confirmation of this area of support long once again. Moving to the euro versus Japanese yen on the other side, we know that this market has actually completed the first target of this measure move that I've given in my analysis well in advance at 140 here, and price never went above 140.49. So you can see there was a move lower, and then the market has been hovering around this area for almost a month, and then eventually in 2-3 days completed this its move and brought price into that first target. Now this is a trace that has a second target as well that is well into this area of support starting at 136.80. So what this market will do, we need to wait to see what this market will do. We have anyway, the market has given us already hints and information thanks to the price discovery capability that this the method derived by the analysis of program trading, effective program trading of price gives. We can see that this inner measure move traced by highs to lows here at 138.40 already got participation and actually brought price into first and second target to the pip. As you can see in the second target 136.38, there was some profit taken. So now, how do we confirm support? The first confirmation of support is coming from price actually breaking above this this level here. I'll remove for one moment. This is the 137.0708. So price breaking above the level would confirm the would actually confirm support at this 3680, and we would then witness with a very high probability a retracement into the 138.24, and that would be a very good trade, probably for 2 to 3 reward to risk here. So that's something that we have to keep an eye on. If that does not materialize, we know that we are going to move into the second target of this measured move, and I need to remove a few of these traces here, and that second target is going to be at 135.47. Moving to the pound versus the Japanese yen, you will remember that now more than 2 weeks ago I provided this trace for you, the 172.45 area of support. We are approaching that level. I will not consider that level yeah, we could consider that level traded because we had 6 pips here. Now we have to see what happens tomorrow and by the end of the week to see whether there will be a participation on the upside, in which case there will be an interesting long here. If price moves below 171.76, then we are going to witness a larger retracement. Obviously, as you know very well, as those who follow me know very well, you don't have to guess here, because you can use the fib stalking timing technique, and you can actually by witnessing a failure of sequence of measurement on the smaller time frame, you can actually decide whether there is participation on program trading. So you want to learn more, read more from my blog, and if you have any questions, just shoot me any questions or email through my website, or send me an email on fibstalker@gmail.com. Moving to the euro versus the Canadian dollar, this market is continuing lower. We know that this market is going to retrace 138 into 138.50, and around May the 29th, when we are here, I mentioned that this market was going to continue lower into that area. That's some magic. There's no long program trading supporting this price, and that's going to be the first area where we are going to see a support, 138.60, and so at the moment we are trading this inner extension. This is from this 148.67 to lows. Now this level was this area was identified after the fact, not before the fact. Most of my trades are identified well before the fact. For example, this trace was identified well before the fact, and there was an entry, a shorts into a target that actually has been reached, and also the second target has been reached, and price continued lower. So I was waiting for a retracement from these lows, but the retracement came from much lower prices. So at the moment you are into this trade, and the first target of this short is 143.45. the second target is 141.83. Moving to the pound versus US dollar, this market is coming into a potential level of support, 170.17. That's an extension long from previous anchor to highs, and we're going to see whether this level holds. If price goes below 169.75, the next level of support is going to be 169.41. So no need to rush here. We can wait and see what happens. Tomorrow is Thursday, and there'll be Fridays as well, so there may be no commitment at this stage on this trade, so let's better to wait. I mean, this is not the best setup or the safest setup we can get on this market. Moving to the Australian dollar versus US dollar, this market has been respecting this area of support, 193.55 twice. The The stop level 093.20 was never touched on the downside, and the price was projected on the upside. So at the moment this market is moving in it's actually moving in extensions. Let me show you why and how. We had a retrace into the old way back here. This area starting at 093.69, price never breached the 93.58 and went into the first and second target, and actually then after that this market came to trade the next measure move long. So this market is a short. My belief, if we break above 094.29, and if that's the case, or 94.28, if that's the case, a retracement between lows and highs could fail, and will probably fail. And the reason for that is this market on the larger time frame, daily and weekly, it's actually showing a correction. So if that happens, I will be prone to actually trade on the downside. So the level to watch is this 194.28. Moving to the US dollar versus the Canadian dollar, and let's go back to the daily time frame. This market is in a move lower, and I was looking for two levels. One was this high to low, which identified after the fact, and as you can see, we are having participation at this level, and it was also possible to get a free risk trade here. However, in the market there are always two group of participants, as you can see here. Longs are actually trading this market, and this market could go then higher, and there is the potential for this market to get into the first target and even the second target. And if that happens, I believe that the first area of serious support for this market is right at this second target, 109 basically. So I watch carefully. I think shorts are unsafe in this market. Longs are a better deal, a better bet. But we don't do bet. We have to always find confirmation through participation program trading on the smaller time frames. When we come to the New Zealand dollar versus the US dollar, we are seeing this gap to Thursday. This is the Thursday bar here. So from this level, there's a possibility now for this market to go and fill this previous gap here. It's not certain. What is important here is that if we break this 85.68, there is going to be a very important development. And if that happens, then there is the possibility for this market to go and retest this 084.15. This would be at the second test, a dangerous test, but only if that happens. So at the moment, if I look at this market, there is probably an indication here of measurement of shorts, which we could not identify in advance. I mean, we identify only after the fact. So as you can see, the first target of this extension has been reached, and now problem trading apparently will do whatever it takes to bring it to the second target. This is an extension. So if that happens, we can kiss goodbye to this level. We can say goodbye, and then we're going to continue to trade this market on the downside until we get into 084.15. This is it for today. Again, this is the Fibstalker midweek review. Thanks a lot for watching. Thanks a lot for subscribing my newsletter and downloading my key concepts ebook. If you want to get more information and also get a very good review that I sent on Sundays to all my new subscribers, go to my website and subscribe for free to my newsletter. It only takes a few seconds, and you are in control. I hate spam as much as you do, and you can actually, if you don't like my content, you can actually unsubscribe at the touch of a button. Thank you very much, and have a great continuation of your trading week, and a great day tomorrow. Bye bye now.